Imagine putting just a small amount of money into a stock sitting quietly under $3, only to watch it explode to nearly $20 within a single trading session. That kind of potential is what draws people to penny stocks. And today we're talking about two such names that are not random picks from a list, but stocks backed by real fundamentals, recent partnerships, and transformative deals that make their future much brighter than their microcap status would suggest. So if you're serious about making money in the stock market, make sure you watch until the very end, and remember to subscribe and turn on notifications so you never miss updates on the hottest stocks moving the market. The first stock on our list is Turbo Energy, ticker symbol TURB. This company may not be a household name yet, but if you've been following the renewable energy and storage subsector, you know the potential hiding here is massive. Turbo Energy is a Spain-based company that specializes in solar energy storage solutions, producing lithium-ion battery systems that allow both households and industrial facilities to capture and store clean power. The mission of this company is to provide affordable, scalable energy storage that can reduce reliance on the traditional grid and enable companies to cut costs while adopting sustainable practices. Financially, Turbo Energy has been struggling prior to this deal. For the fiscal year ending December 31st, 2024, the company reported revenue of €9.42 million, a 28% decline year over year. It posted a net loss of approximately €3.34 million, translating into an earnings per share figure of about minus 30 cents. These numbers reflect the challenges of being a small, early-stage energy storage company that has to pour heavy investments into R&D and scaling operations before reaching profitability. But with the new contract on hand, the revenue picture for 2025 and beyond could look radically different. While no quarterly earnings for 2025 have been made available yet, and no Wall Street analysts are officially covering the stock, the momentum here cannot be denied. From a valuation perspective, Turbo Energy is still very small, with a market cap of just $200 million even after its massive spike. That makes it highly speculative and volatile, but it also means any meaningful execution on contracts could dramatically boost its valuation. Traders see the short-term price target somewhere around $9 to $10 if momentum holds, though there is always the risk of a sharp pullback. Long-term, if Turbo Energy can continue to win deals of this scale, it has the potential to become a legitimate player in the energy storage market, which is projected to be worth hundreds of billions globally in the coming decades. The fact that one contract alone can change its entire revenue trajectory shows the asymmetric risk-reward profile that makes this such a fascinating penny stock. It's risky, yes, but also full of potential upside. Now let's move on to the second penny stock, which offers a very different kind of opportunity, but one that is equally compelling. That stock is Kromek Group, trading on the London Stock Exchange under the ticker KMK. Kromek is a UK-based technology company that develops and manufactures radiation detection components and devices for markets, such as advanced imaging, security screening, and CBRN and biological threat detection. In simple terms, this company builds the sensors and systems that can detect radiation and dangerous biological or chemical threats, technologies that are critical in defense, homeland security, and medical diagnostics. This puts Kromek in a very niche but highly strategic position at the intersection of defense and healthcare, two industries that are not only large but also enjoy consistent demand. Kromek generates revenue from two primary segments. Its advanced imaging division, which supplies high-performance detection materials used in medical imaging systems like CT scanners, brought in £27.83 million. Meanwhile, its CBRN and biological threat detection segment, focused on devices that can detect radiation or harmful biological agents, contributed £7.66 million. Financially, Kromek has made impressive progress. For the fiscal year ending April 2025, it posted a net income of £3.75 million, a remarkable turnaround compared to losses in previous years. This marks an important milestone because it proves that the company is not just surviving, but has the potential to be consistently profitable. At the same time, its balance sheet looks relatively healthy, with more cash than total debt and short-term assets comfortably covering liabilities. However, there are areas that need improvement. The company's return on equity stands at just 7.2%, which is low compared to industry averages, and its interest coverage by EBIT remains slightly below ideal levels, showing it still needs to strengthen its operating efficiency. Looking at interim results, Kromek's performance has been a bit uneven. In the first half of 2024, the company generated revenue of £3.7 million, down from £7.1 million in the same period the previous year. While gross margins improved to 56.9% from 54.2%, the company still recorded an adjusted EBITDA loss of £2.3 million and a pre-tax loss of £5.7 million. This shows that while annual results are improving, short-term fluctuations in contracts and deliveries can significantly impact quarterly numbers. Nevertheless, the company maintained its cash reserves, ending October 2024 with £0.6 million compared to £0.5 million in April. Despite these short-term challenges, analysts remain very bullish on Chromec's long-term outlook. The average 12-month price forecast is an eye-popping £26 sterling and 52 pence, which represents a massive 342% upside from the current stock price of just £6 sterling and 9 pence. The forecast range sits between £26 sterling and 26 pence and £27.3 sterling, showing strong consensus among analysts. Based on the ratings of 9 analysts, the stock carries a solid buy recommendation. This bullish outlook stems from the company's strong positioning in defense and healthcare, sectors where spending remains resilient regardless of broader economic conditions. With global defense budgets rising and healthcare imaging demand increasing, Chromec is well placed to grow. The long-term potential here lies in its dual exposure to 2 industries with global demand. The defense side of the business is expected to benefit from rising geopolitical tensions and government spending on homeland security, while the healthcare side is poised for continued growth as medical imaging technologies become more sophisticated and widely adopted. If Chromec can continue to secure contracts like those with the UK Ministry of Defence and Siemens, it will not only stabilize revenue, but also expand into new markets globally. That's the kind of growth that can take a small-cap penny stock trading around £6 sterling and multiply its valuation several times over. Well, that concludes our list of 2 penny stocks with explosive potential, Turbo Energy and Chromec Group. Both companies are very different. One is an energy storage player riding the renewable energy boom, while the other is a technology company focused on radiation detection and advanced imaging. But what they have in common is the ability to completely change the financial trajectory of investors who get in at the right time. Turbo Energy showed us how a single contract can turn a struggling company into the talk of the market overnight, while Chromec shows us the value of steady partnerships and progress toward profitability in niche but critical industries. Remember, penny stocks are risky, volatile, and not suitable for everyone. But for those who are willing to take calculated risks, these names represent opportunities that could turn small investments into massive returns. If you enjoyed this analysis and want to stay updated on the hottest stocks with millionaire-making potential, make sure to subscribe and turn on notifications so you never miss an update.